Today's video is all about the Australian dollar. I'm going to show you a high conviction setup that could materialize over the coming days. I'll show you the trigger for that move and also my target, as well as the latest on the DXY and also the S&P 500. Now, if you do want my help with your trading, click on the link at the top of this video, and that's going to give you 90% off lifetime access to the VIP trading group and also the course that I just launched, which, by the way, what I'm showing you in today's video is exactly what the course teaches in detail. So click on the link in the description of this video, or if you're on the website, click on the link that says join VIP. All right, so looking at the Australian dollar, I mentioned this over the weekend, but I did want to go into a little bit more detail in today's video, just because, like I mentioned at the intro of this video, these are high conviction setups, what I'm about to show you, but I also want to preface this with saying that there is no setup at the moment, because first of all, we have the market just going sideways here at this key area, which you can see back here was resistance and then support through here. Okay, so right now the market is holding above this area and just going sideways. So right now there is no setup. And secondly, I also want to point out that what I'm about to explain to you is not to say that this is the high conviction play right now, because again, there is no setup. This is a case where we either get this or we don't. Okay, so let me go ahead and go into this in detail and show you what I'm looking for. And the first thing that we have to understand with this market, and really any market, is that markets seek liquidity. So when we look at the Australian dollar here on the daily chart, what you're going to notice is that the market spent a lot of time between these two areas right here over the past few months. Going all the way back here to late 2023, you can see we've got the lows down here. And then here in 2024, we have the market building these highs up here right around 66.27. Now, what you'll notice is that over here, okay, and I mentioned this over the weekend as well, but over here we did get a failed breakdown. Okay, so we can also just call this a breakout, because a breakout is not inherently bullish. And I'm going to change this to red just to differentiate this from the sideways consolidation here, this range. So what you'll notice back here is that we did get the market moving below these lows over here and then closing back above. So a failed breakout, and again, this is what I teach in the VIP course, is simply a move below lows like this that build up, or highs, and you get the market sweeping those lows. And the reason we get that sweep is because there is liquidity that builds below these lows. Okay, so this right here is sweeping that liquidity. Again, markets seek liquidity. Liquidity is needed for markets to move and also for big players to get in and out of the market. So essentially the market comes down here, sweeps that liquidity. You've got big players getting in down here. This is an accumulation zone. And the trigger for the long was this close back above. And even though it was relatively choppy, you can see that if you had gotten in through here on, even this retest down here, or even the close with a stop loss down here below the low, that would have played out relatively well if this up here was your target. Okay, so what you're essentially doing here is you're waiting for the big players to show their hand. And they showed their hand right here on this close back above within this range. Okay, so you got the break below. They showed their hand here with this close, and you're looking to essentially ride their coattails for this move back here toward range resistance. Now, you can see that we have a very similar situation here for the Australian dollar, only this time we have the market breaking above these highs that have built up here in 2024. And you could argue that this level was even more significant than this one down here, simply because we only had really two touch points down here in this area, whereas here in 2024, we have a lot more up here at 66.27. Okay, so let's go into some detail about what happened here in 2024 at this level. So back here, you can see that the market spent over a week consolidating here. And again, it meant that there was liquidity building above here. There were stop losses building above these highs. And you can see that the market captured that on this wick. Now, since that time though, the market has retested this level a few more times, including through here, this touch, this one right here, and these. So there was liquidity building above this area up here into this wick, okay? Now, this recent move, you see this aggressive green candle, this was so aggressive because the market was essentially sweeping that liquidity that had built up through here, okay? So we got the move above these recent highs, swept the liquidity, and now the potential setup, okay? The potential setup here for the Australian dollar is that this up here could be a distribution zone, okay? Distribution zone, very similar to this being an accumulation zone down here. And so if that sets up, again, it's a big if, this has not materialized just yet. If that sets up, then this up here could become a failed breakout, very similar to what we got down here. And if that's the case, I know from experience that these are high conviction plays. Now, the key for the Australian dollar is going to be twofold. First of all, we need the market closing below this lower boundary right here around 66.76 or so. Okay, so you can see that here on Friday, the market closed back above it. So this is technically support on a daily closing basis. Remember, this is the daily time frame. So in order for this to even start to set up, you would need to have the Australian dollar closing back below this lower boundary right here. So if we got to close back inside of this area here this week, then this becomes resistance and this down here becomes support, okay, 66.27. But just remember though, for this to become a fake out or a failed breakout, we would need to see the market closing back below 66.27, those recent highs. So very similar to how we got the close above the range lows here. To confirm that this was a fake out, you would have to get the market closing back below 66.27 to confirm that this up here is a fake out and target some of these recent lows, including the range lows around 64.50. Okay, so really very simple, but good trading is always simple, but it is not easy. And the part that is not easy is waiting for this to set up, because a lot of people don't have that kind of patience. But really, you need that kind of patience if you're going to be a swing trader on the higher time frames. Okay, now let's take a look at the DXY, and we're also going to talk about the S&P 500 with the SPX, because those are going to matter when we're talking about the Australian dollar. So first of all, we have the DXY coming off of channel support down here. So we've talked about this over the past few videos, including over the weekend, where you can see that so far in 2024, the DXY, the US dollar index, has moved within this ascending channel. So as long as the market is above this 104 area down here, I am cautiously bullish on the dollar. However, like I mentioned over the weekend, we would need to see the DXY reclaiming levels like this back here at 104.52. So I want to see the market reclaim this low back here, which you can see on Friday it tried and failed. So if today or tomorrow were to close back above here, it doesn't have to be within a specific time period. But if we were to see the DXY closing back up here in this area, then that would be the first step in confirming that this down here is at least a local bottom. And then 105 would be the next significant test for dollar bulls. Okay, so when we look at the DXY in combination with the Australian dollar, if we were to see a reclaim of 104.52, that would turn me a little bit more bullish on the dollar. If we were to see a reclaim up here, okay, then this right here would turn me even more bullish on the dollar and signal that next leg higher for this market. So when we look at this in combination with the Australian dollar, right, if the DXY were to break back above 104.52 and especially 105 while this market is breaking back down here, then that would give you even more conviction for a short against levels like 66.27. Okay, now obviously if that doesn't happen, then there is nothing to do here. If the DXY can't reclaim those levels, then in my opinion, there's really nothing to do, because I don't want to short on a breakdown below this level simply because that's not the way that I trade. That's not my style of trading. And the same thing here with the Australian dollar. If this doesn't set up, and I want to be really clear about this, if this doesn't set up and the market just takes off and continues higher, then I do nothing here, right? This isn't about being right or wrong. It's not about ego. It's about having a plan and then waiting for that plan to set up and knowing that if it doesn't set up, that's okay, because I know that there are other opportunities out there that will be coming up within the coming days and weeks. Now, let's also take a look at the S&P 500. And I want to show first, though, the relationship here between the S&P 500 and the Australian dollar. So a lot of people don't know this, but the Australian dollar and the New Zealand dollar both track risk assets very, very closely. So you can see going all the way back here over the past few months on the 4-hour chart, there are some deviations here, of course, where we have the S&P 500 moving higher back here and the Australian dollar moving lower. But for the most part, you can see that over the past few months, okay, they have been moving together. So the S&P 500 is going to matter for the Australian dollar. And this is almost a little bit of a bonus for you guys in today's video, but I'm showing you the SPX daily time frame. So you can see here that this was a range for the S&P 500. Now, we obviously saw the market break to new all-time highs back here. However, it is kind of bumping its head along this trend line off of these lows. Now, where a lot of traders will get themselves in trouble is they'll start looking for shorts up here, but this is not the kind of market that you want to be shorting without confirmation on the higher time frames. In other words, you need that high conviction play to even think about shorting this market. Because if you're shorting up here we could just see the market continue to turn higher and take out this level and just continue up, right? So this is not the kind of market that you just want to short a simple retest like this. And again, I know from experience that the high conviction play, the high conviction play here for this market, and again, remember, this is correlated with the Australian dollar. So if we see the SPX do this, you can bet that the Australian dollar is also going to be following. So you can probably see what I'm talking about here, where if we get the S&P 500 showing us that this up here is a failed breakout, then that is going to be bearish for the Australian dollar and bullish for the US dollar. Okay, so specifically, we need the market closing back down here. We need it failing below both this previous all-time high and also this closing price through here. Okay, so specifically 52.65. We need to see this market closing back down here to set this up as a failed breakout and expose some of these recent lows, including the range lows down here around 49.30. Now, again, I do want to be clear, though, that this is not endorsing a short here. It's not saying that this is the high conviction play, because in my opinion, if you're shorting up here, you're doing so without that conviction. You're doing so without that confirmed setup. Okay, at least for the way that I trade. The way that I trade, I'm looking for a failure of these highs as support. Okay, a lot of people look to buy right here, and that could work out, and that's great. Again, if the market just continues higher, then I do nothing and I move on to another market, right? But if we get that move down here, the close back below here, I know that that's a high conviction short to play the range that is built up here over the past few months. All right, so I hope that that's given you some food for thought when you're trading the Australian dollar. But really, when you look at just this market, specifically, again, it's pretty clear that we need to see this level down here at 66.27 fail in order to look for a move down here toward the range lows, right? And again, this is just the way that I trade. This is what works for me. You have to find what works best for you. This down here could be support for you. You could be looking for this as a confirmed breakout and looking to buy down here for that move higher. And if that's what works for you, if you've done your back testing and forward testing and you know that that works and it's profitable, then that's great. Again, if it works for you, then all the more power. But for me, I know that these are high conviction trades where you get the market closing back within ranges like this, following a sweep of those recent lows and also highs. Subscribe to the channel and click the bell icon for notifications. Don't forget to claim your 90% off VIP access to the trading group and also the course that I just put out. See the link in the description of this video, or if you're on the website, click on that link that says join VIP. Trade well out there, and I will talk to you again tomorrow.